John D. Rockefeller. You hear that name and you just think money, power. But how did one man build an empire like that? Well, I'll tell you, it wasn't luck, not even close. It was a system, a playbook. And that's what we're going to do today. We're going to deconstruct the strategic genius behind Standard Oil and look at the blueprint, a masterclass in how to build an empire.
So let's just get right to it. The big, kinda uncomfortable question that his entire life answers. How do you build a monopoly? Seriously, let's forget the larger-than-life caricature for a second. We're going to look at Rockefeller like a grandmaster chess player, breaking down his playbook move by move.
All right, first things first, we have to get inside his head. See, Rockefeller wasn't just some guy chasing a buck. He looked out at the early oil industry, and what he saw was pure chaos. It was like the Wild West, everyone gambling, everyone speculating. And in all that chaos, he saw one thing, an opportunity to bring order, his order.
And that brings us to his first and maybe his most brilliant move. See, everyone, and I mean everyone, was out there gambling on striking oil. It was a total lottery, high risk, maybe high reward. But Rockefeller, he did something different. He made a really deliberate choice to step back from all that and focus on refining the oil. He realized that's where the real, stable money was. It was the one part of the value chain you could actually control. He chose the boring factory over the exciting lottery ticket, and man, did that pay off. Okay, so he's in the refining game, and now he unleashes his secret weapon, his superpower, really. And it was this absolute crazy obsession with efficiency. We're not talking about saving a few pennies here and there, no. His goal was to make his operations so cheap, so incredibly lean, that it would become mathematically impossible for anyone else to compete with him.
So how did he do it? It was a simple but relentless three-step process. Step 1. Hunt down every single drop of waste. I mean, they say he'd count the drops of solder used to seal a can. That level of detail. Step 2. Create a system to fix it, a repeatable process. And step 3. This is the magic right here. Scale that tiny fix across the entire operation. You save 1 cent on 1 barrel? Who cares? You save 1 cent on 1,000,000 barrels? Now you're building a fortress of cash that nobody can touch.
And this quote from the man himself just nails it, doesn't it? He's basically saying, hey, this isn't magic. There was no secret formula. It was just work, a relentless, exhaustive pursuit of perfection. He was simply outthinking and out-hustling everybody on the fundamentals of the business.
So he's perfected his operation on the inside. It's a lean, mean, money-making machine. What's next? He turns his gaze outward. He realizes, okay, to really run the show, I can't just be the best. I have to own the show. And to do that, he used 2 killer strategies that fed into each other to create an unstoppable force.
Strategy number 1, horizontal integration. Sounds complicated, but it's dead simple. If you can't beat them, buy them. That was the idea. Rockefeller started going around, checkbook in hand, just buying up his rival refineries, one by one, folding them all into the Standard Oil banner.
But here's the thing, buying all your competitors is great, but you're still at the mercy of your suppliers, right? So at the same time, he's running strategy number 2, vertical integration. This meant buying everything else in the chain, the pipelines that moved the oil, the forests for the wood to make the barrels, the chemical plants. He wanted to own the whole process, from top to bottom.
Now this is where the genius really kicks in. Look at how these 2 things work together. It's a feedback loop. He buys his competitors, right? That's horizontal. That gives him more size, more market share. That size gives him the power to go to suppliers and get better deals, or just buy them outright. That's vertical. Owning the suppliers lowers his costs, which gives him more money to go out and buy more competitors. See, it's this brilliant, vicious cycle that just keeps feeding itself.
And if you want to know how brutally effective this was, just look at this number. 22. That's how many rival refineries he bought in his hometown of Cleveland during something that became known as the Cleveland Massacre. He took out 22 of the 26 competitors. And get this, he didn't do it in years. He did it in a matter of months. It was a corporate blitzkrieg. Okay, so efficiency and acquisitions got him to the top of the mountain. But to be the only one on the mountain, that took something else. This is where the story gets a little darker. We're moving from tough, smart business to, well, creating a playing field that was just fundamentally unfair.
Think about it. His company now controls this huge, massive river of oil flowing across the country.
And with that volume comes a new kind of power, leverage, pure, raw leverage. And he knew just the place to apply it to completely suffocate what was left of the competition. He found a secret weapon.
And that weapon was the railroads. Just look at these numbers, it's insane. Because Standard Oil shipped so much oil, they were the railroad's #1 customer. So Rockefeller goes to them and cuts these secret deals. He gets a huge discount, a rebate on his shipping. But that's not even the craziest part. He got deals where the railroads would actually pay him a piece of the fee his competitors paid to ship their oil. So for every buck a rival spent, Standard was effectively paying 50 cents. How can you possibly compete with that? You can't. Game over.
So what do you do with an advantage like that? You weaponize it. This led to his final kill move, predatory pricing. He'd roll into a new market and just slash his prices to ribbons, way below what it cost anyone else to produce. His rivals would just bleed money, day after day, until they had two choices, go bankrupt or sell out to him for pennies on the dollar. He had a name for it. He called it giving them a good sweating.
And that was it. Endgame. Through a combination of brilliant efficiency, strategic buyouts, and just ruthless leverage, Standard Oil had done it. It had achieved pretty much total dominance. But you know what they say? When one company gets that powerful, a backlash isn't just possible, it's inevitable.
This timeline really tells the whole story, doesn't it? In 1882, he creates the Standard Oil Trust to formalize his control over this massive empire. But people are starting to get angry. The government gets nervous. And in 1890, you see the response, the Sherman Antitrust Act, the writings on the wall. And finally, in 1911, the big one, the Supreme Court steps in and says, that's it, it's over, and they break the whole thing up.
So, when you boil it all down, what are the big takeaways from the Rockefeller playbook? Well, first, be obsessed with efficiency. That's your foundation. Second, use acquisition strategically to shape the market. Third, own your supply chain, because that's how you control your own destiny. Fourth, forge partnerships that give you an unfair edge. And maybe the biggest lesson of all, remember that if you win too big, the government is eventually going to come knocking. And that leaves us with one last really big question that's just as relevant today as it was 100 years ago. We celebrate brilliant business minds, right? We love visionary founders. But the story of Rockefeller makes you wonder, where is the line? At what point does strategic genius cross over into an unfair monopoly? It's the same debate we're having today about big tech, isn't it? Definitely something to think about.